we had the momentum tech sell-off on Friday. We talked about watch whether or not that would spread. You get people who come out, they're convinced with their biases. If people are convinced the market's going to go down, they see something like that on Friday, they say, oh, this is going to spread to small caps or to energy or to financials or whatever. And that's really not the right approach to how you look at the market. What you look at the market is you say, wow, something unusual happened today. Let's see how the market now responds the next 1 to 3 days. And what we've seen in the response is, number one, the SPYs couldn't care less. On the tech stocks that sold off, some of them have cut, like Tesla, maybe strongest stock in the market, has made a new high. Others have retraced, 30 or 40%, and others have retraced more than half of their down moves. And so everything got caught up in the down, and now the things are being separated by overall how strong they really were coming into that sell-off. So there's good information there. And we'll look at some of those names after we go through the fresh stuff. So we're right back up to where we topped out a couple of days ago, 245, and came off a couple of bucks. Actually, technically, I think almost $3 there intraday. And yesterday we caught a bid above 243.5, closed pretty strong, gapping higher. If we zoom out a little bit, basically not much happened. We took out the support for an intraday at one point. We closed above it. We opened below it the next day, but we could close below. So buyers very much in control of large caps and the SPYs. IWM. Seems to be just digesting this this move here from 39 up to 43. It did pull back and test 141 when the tech stocks sold off on Friday, and then again twice on Monday, and then narrow range day yesterday with a bit stepping up throughout the day, it looks like. Just and so basically you had this large move here, very small retracement as the rest of the tech sector was getting crushed, and then the bid basically just stepping up from 141 for 2 days now. Test, and then bid steps up, bid steps up, bid steps up. Let's see where we are. So basically you want to see on the open, can it consolidate somewhere above in this area here and then break to the upside again? I think way back when, if we go to the daily, we looked at this probably months ago in terms of measured moves to the upside. And this, we did this a while ago, and it was, there's some more upside here. It now looks like that's going to come. For a while, it looked like it might not come to fruition when I was trying to break down here. We made the new high and tried to roll over, but it never closed. It never really closed below this multi-month support. So it looks like it's going to have another leg, and 42, probably 44 to 45. I think is pretty reasonable. It's very impressive. And the Qs is above where I shorted yesterday morning. So it was 140.50 yesterday morning, right? It came off a buck, tested the prior day's high, and then was scooped up pretty quickly. And so that's if you're somebody who's long the market and you're looking closely now that we're have gone up a ton, and you're looking for things to get you out or get you to buy some protection. After you have a down day like Friday, you want to see how the market reacts. And so far, so good on the tech sector. We took out Friday's low here, quite a quick bid. Buyer stepped up, sold off yesterday morning, but they stepped in right at the prior day's high, and then stepped up again in the afternoon, and now they're above yesterday's high. So this is kind of what you want to see if you're long the market. And to feel really comfortable, let's go to 30 minutes. Close above around close above 141 to 141 and a quarter. This little consolidation area here. You start to get some closes back up here. You get ready for a retest of the highs. And it's also obviously you can fail in this area too. So you want to be very mindful when it gets to the low 141s how the market behaves. All right, H&R Block, HRB. So HRB had a really nice beat. It was above 30 in the pre-market now. Looks like it's getting a little selling. Here's the daily. And so when something has a beat like that, we want to see where it is in relation to the bigger picture. It did sell off from the mid-30s all the way down to 20 at the beginning of 16 and at the beginning of 17. So, and then recently, caught a bid. Part of that may be because people don't, I think part of the fears were that there'd be some sort of massive tax reforms. Trump talked about that. I think now that people have seen him operate for a few months, 4 or 5 months, they realize that most of this stuff isn't going to happen. And so they're less worried about HRB's business. And I think even if they did tax reform, people, they are a low-cost provider. You'd think that people would still go to them. But just a general sense of why they caught a bid over the last couple of months and haven't been, wasn't stuck down here. So, and the numbers turn out to be good. It's gapping up right here to last March. It gapped down to below 30, and that led to it coming into 20. So we're right back there. The question really is, can it fill the gap, or is it going to fail there again and maybe come in and come back down to 28 or so? So a couple times in the pre-market, actually the after hours popped above 30. Pre-market this morning hasn't really been above 30, but they are buying it right here at 29.50. Well, you know what? It's only traded 30,000 shares, so we're gonna have to wait for the market to open. So my plan is to fade into this. If it gets closer to 28, fade into this. Inside of those areas, you want to be a little bit careful. Right here. Perhaps maybe it does pull in a little bit below that 29.50 and then bounces back to 30, but you just want to be a little more careful. You like to get it at the extremes of the range. Whether any time frame you're trading in, whether it's a few minutes, a few hours, or days or weeks, putting on trades in the middle of a range that you're looking at, unless you have something very clear on the tape and a lot of volume, is very dangerous. So, for example, if it came into 29 and spent 20 minutes consolidating there and then broke either direction, then that would be a little bit different, as opposed to right on the open where you're going to get the wild gyrations. The next one is ALXN. This is, they hired a new CFO. It seems to me this is a bit much. Let's look at the daily. Let's see how much it's down. So this was a $200 stock. It's been a very rough ride down. It's tried to bounce a bunch of times. But with the whole biotech sector has come down, and then this 130 to 140 area, I'm sure we've talked about it on these couple of these occasions when it's gapped up into this area. It just keeps on failing. And it's even below. If you look at the kind of this consolidation range, it broke below there a couple weeks ago, took out the 110. So you have a bunch of people who are buying this thing between 97 and 110, and now it's gapping back up to 114-ish. I would think they would be incentivized to sell in this area here, and perhaps it could roll over back down to 111, 110. Put 111.80 there as my bottom support. Could maybe roll over a little bit further than that. So CFO hired, goes up $4, then it's a little bit higher now, and it's already, let's look at what it's done over the last, there's already, for what, 3 days, coming into this. So yeah, I would look for a failure up here. And then you'll see if it fails there and comes into 112, is it bought there and it bounces back strong, or is it bought a little bit, has a shallow bounce, and then takes out 112 when you come into this. DFIM, they did a secondary at 21 and a quarter. It was at 23 in the pre-market. The best explanation for why it's gapping up on that secondary is they announced the large secondary, and it was 22.60 before that started, and then there was a lot of selling pressure coming into the secondary that people liked where it was priced down here, and they're willing to take it right back up to kind of where it had been recently. So it's a little bit different than other secondaries we've seen recently where it's been down in the secondary area and we've played it for a bounce from there. So I would watch this. What did I put on the sheet? I put 22 as support. It's a little bit, it's a little bit deep on the pull, and I certainly would be a buyer in 22. But also you have this little gap here into 22.50. So I'd watch this level as well. BKD. The risk here, before we even get into this, and it's fourth in the list, experienced traders, it could get halted. Yesterday it popped potentially because they are going to be bought. Here's the pop from 14.5 to 15.30. They closed it all the way back down here at 14 where it had been a couple of days ago. It looks like the deal is likely to happen, and that's why it's gapping above yesterday's high. If there's a little bit of profit taking right in the open and they got closer to 15, I would give it a shot there. Somewhere in this area here. So I could see it running back up to the prices they're talking about, $21 a share. Even if they traded at, let's say, 15% below that, coming into the deal, that's still up around $18. So there's some upside from here. There's just halt risk if a deal gets announced or no deal gets announced. So just be aware of that. Incentive to get in and out quickly. Try to buy it at a pullback, get out in the next 10 minutes, 30 minutes. Take what you can get. And then EPZM, they announced phase 2 results. The headlines were that they were good, but I took like 2 minutes to quickly look at the numbers of the patient response and complete remission, and they actually looked pretty bad to me. And also the sample size didn't look that good. So, it's already come off from 18 to 10, and now it's gapping down to 9. So maybe that's cause for it to bounce, but the numbers did not look good to me. I'll share that in the chat if anyone's interested. If you want to see what the phase 2 trial data look like. Ralph, if I could remember 10% of the tweets on stocks I've done more than a day ago, I don't know, I'd be a chess champion. My memory is not that good anymore. So normally trades 800,000. Just looking on the daily on this, it could easily trade 2+ million. I think it's worth keeping an eye on. It's a beaten down meme, so if we see it being accumulated in the 9 area here, maybe it can bounce up to 10 or even back up to $11. Obviously, if it takes out 9, has a hard down move from there, and comes back into 9 and is being sold, it's short it into that resistance. Okay, Apple. So Apple, we were buying down 143 a couple of days ago, and yesterday, I guess it traded above the prior day's high right on the open and came back in to the closing level, filled the gap here, and then caught a bid, and they grinded it up the rest of the day, and it looks like it's testing this again. This is an interesting area. So I put 147.5 to 148. So it's not that much of a bounce for the size of this down move here. And so it definitely looks like it could roll over again, just from a pure price action standpoint. So in these cases, sometimes they'll do a little bit of a pop right on the open, and then you'll get a hard down move, and then that'll lead to the rollover, which would take it to, I don't know, yesterday morning's low. You got to close above 148, then I would start to think the buyers are back in control. Facebook, we haven't talked about it in a while in the morning meeting, so I figured I'd just give this one a shot. It's very similar to Apple in terms of strength and volatility. So this one, the bounce is a little bit bigger here. It's back above the key psychological level, 150. I put 152. So if you look at the day that it came off, I just got an LVS alert at 65. Failed there 4 times yesterday, LVS at $65. So I would watch this one right on the open, see if it takes out yesterday's high, and spikes up to 52. And see how it behaves there. Does it come back down and test the prior height and do one of these, or does it actually fail at 52 and then come back inside of yesterday's range? BABA, I really like BABA. So BABA had a huge move, which it's digesting. Probably better on the 30-minute. So their numbers, they raise guidance a ton, and it had second-day follow-through, but then when the market reversed in tech, it's come back in, and it's just been a phenomenal buy in the 136 area. Day one, it was a phenomenal buy here. It didn't quite get there on the Friday sell-off, but it got there on Monday, and then it was there at the end of the day yesterday. So, clearly, this $42, this $6 range here, now you're getting a consolidation. What you want to see is it start to get tighter, something like this, and then break. The burden is on the sellers to show that it can break to the downside. Even if it took out the support area here, I'd watch it over the next couple hours to see if it went back above. So that's it. ALXN, if you look at the days that it had big moves, Ralph, if you go on the game plan sheet, you'll probably see my notes, whatever. But yeah, there was, I think, not the last time it was in play, but the prior time, I think we had a really good call where we said, look at the shorted at some level, and it came off like 10 or 15 bucks from there. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.